Great. Welcome to Digital Asset News. My name is Rob, and today, just the thumbnail and title suggests, I have to tip my hat to Blackrock. They played things perfectly at the right time, and this really is a definition of smart money. So we're going to take a look at exactly what they're doing as they've come into contact with Coinbase as they form up a pretty big partnership. Also, we'll also talk about Coinbase and a potential lawsuit dismissal before it goes to the Supreme Court. Then we'll talk about a Voyager and Solana updates, which would be pretty interesting for people, especially for the ones that are on Voyager. And lastly, I think this is the most important part. We're going to talk about macro environment, economy from the people who are actually in the thick of it. Don't get confused with the numbers because you can cherry pick all those day long. Now we're going to take a look at people who are actually in it to where we are potentially going. Last, we'll do a little Q&A. So first things first, thanks everybody for showing up. I do appreciate it. Let's take a look at what's going on in our market today. Not too bad. We take a little bit of a pullback, kind of choppy going sideways, and it is what it is. In the last 24 hours, Bitcoin is down 3.7%. Look, if you're in traditional finance, this is like the worst day ever. For us, we call this a Thursday. Not a big deal. We're down almost 4%. I couldn't care less. Ethereum's down 4%. Binance Coin, Actually, everything's up. Down, I should say. Solana's down only 5% after that alleged hack, which we'll get into. Again, like we talked about yesterday, it was an ecosystem hack, not a Solana layer 1 solution hack, but people get a little bit twisted. That's just how it goes. Polkadot, everything's down. Oh, wow. Ethereum Classic is down 8.2%. But they had a marvelous run, so congratulations all you Ethereum Classic holders. I do not hold it, which is why I don't talk about it that much, because on this channel, I'm super biased. If you don't already know, I usually talk about the things that I invest into. That's pretty much about it. So that's what we got as far as the market itself. Now I want to share with you real quick a chart from lookintobitcoin.com. If you are searching for some pretty good indicators, I cannot recommend this site enough. Lookintobitcoin.com. There's a link in the description. And oh yeah, it's 100% free. So today I just want to take a look at what they call the Bitcoin Rainbow Price Chart Indicator. I think this is kind of, it's funny. The name itself doesn't seem very serious, but if you take a look at it, it's been reasonably accurate for a little bit of time over the last, 8-10 years or so. But there's other indicators on the website. But what I'd like to see about this one, let me blow this up real quick so you can actually see this part right here. As we take a look, in the black is the price of Bitcoin. And you can just tell by the bands when would be like a good time to buy, when to be a good time to sell. And if we can see right here, the blue band is a fire sale, meaning it's like the cheapest it could potentially ever get. Does that not mean it could go lower? No. It just, maybe this is a good price point. And like I always talk about this channel, you always have to ask yourself, are the assets that I'm buying, are they expensive or are they inexpensive? Are they super pricey or are they cheap? Right now, I see Bitcoin as being a little bit inexpensive. Who knows what it'll be in 3, 5, or 10 years? I just think right now might not be a bad time for me to buy. I can't tell you what to do. I'm not your dad. I'm not a financial advisor. So do whatever you want to do. This is just the things I'm doing, which is dollar cost averaging Bitcoin and Ethereum. So again, the price chart indicator, you can see that this right now is roughly a fire sale. As we actually, let me build this up even better. To right now, today, we are pretty darn low. And we've been low since around June 13th, 18th, somewhere around there. And again, if you're looking for an entry point, this might be a good time. Now, there is one thing about this rainbow chart indicator. I think it's pretty interesting that it'll go from fire sale all the way up to maximum bubble territory. And it did a really good job around here. Oops, that's not going to be right. Around 2017, it called it perfectly, right? Right at the top. Not too bad. 17, 19,000. But you can see that as time has passed, it's missed a couple. It missed in 2013, missed in 2011. And oh yeah, over here, as you can take a look, it totally missed the all-time high in 2021. So again, all indicators are wrong and some are useful. That's what Ben always talks about. I kind of think that's the same thing with people, but that's what we have. If you're looking for more indicators, go to lookintobitcoin.com. All right, so that's what's going on in the market itself. Let's take a look at the big story. BlackRock. So if you don't know BlackRock, pretty big institutional institution itself. It's got a measly 10 trillion assets under management. And I got to tell you, they did this so well. And what they did is they said, hey, we're going to team up with Coinbase and offer our institutional investors crypto, which is where they were not doing before. So Blackrock to offer crypto for institutional investors through Coinbase Prime. Here's what's going on. Asset manager giant BlackRock is partnered with Coinbase. And I got to tell you, I'm pretty sure Kathy Wood right now is going, maybe I shouldn't have sold all that stock. Anyhow, this is from Joseph Chalom, global head of strategic ecosystem partnerships at BlackRock. And he states, our institutional clients, let me say that one more time, our institutional clients are increasingly interested in gaining exposure to digital asset markets and are focused on how to efficiently manage the operational life cycle of these assets. This connectivity with Aladdin will allow clients to manage their Bitcoin exposures. I'm sure it's not just Bitcoin as time goes on, directly in their existing portfolio management and trading workflow for a whole portfolio view of risk across asset classes. And I never understood why these big institutions wouldn't say, hey, there's this asset class, more specifically Bitcoin, and it has outperformed every stock, every commodity, well, not every commodity, every stock, every asset in the history of trading. And it's been doing this for years and years and years. And maybe it's time that you take a look at this and maybe diversify your portfolio to a riskier asset. Now, it is very volatile, but there's a massive asymmetrical return. I never understood why they did that. And now it kind of makes a lot of sense, especially with the timing. So the integration comes 4 months after BlackRock CEO Larry Fink said that the world's largest asset manager would explore ways to offer digital assets to its clients. And I was like, did he really say that? And yeah, 4 months ago, March 24th, BlackRock looks to offer crypto services as client demand rises, which is amazing that, and this is very odd, you might not understand this, but outside of crypto, a lot of these businesses, institutions, and platforms, they actually set a timeline and hit it. I know it's crazy to think, especially with crypto, as it's a little bit erratic. But this is actually something they said they were going to do, and they did. So hats off to them. But this is the most important part. It's the timing. And it comes down to just roughly about a year ago, April 15th, 2021. That's Larry Fink. He's the CEO of BlackRock. And he says, cryptos may become a great asset class. I don't know, just maybe it will be, but it's, best performing asset class ever. But his institutional clients aren't interested in it. Of course, they're not interested in it because he probably tells them it's not that great. I mean, it may be something great down the line. I don't know what he said, but it is interesting that back then in April 15th, 2021, it's not that great. And then over here, they just put this out to their investors in a newsletter and said, hey, we are going to be putting this in through Coinbase, and maybe we should talk about crypto. The funny thing is if you take a look at April 15th, 2021, you know what that was? That was roughly the all-time high for cryptocurrency. So why would they want to get into that time frame? That's a recipe for disaster. They're just going to say, that's not that great. That's not the big deal. Just wait a little bit. And that's the difference between smart money and unfortunately dumb money. They wait. They know how potentially big it could be. And they say to themselves, you know what? Let's just slow it down. Let's just wait a little bit. Let's talk to our institutional, our clients. Say it's not too fantastic, but once it really goes down, and let me tell you, we are pretty down, maybe now's the time to get into it. And that's what smart money does. So let me just think about that in the comments section. I think this is the right time. People complain about bear markets, but this is when everything gets built. So let me just think about that in the comments section. Let's move on to Coinbase. More Coinbase news. Wow. Brian Armstrong's really, really hot today. Coinbase is asking the Supreme Court to stop lawsuits from account holders. The Supreme Court. Here's what's happening. And tell me if you think this is dumb or not. I find this offensive. Coinbase wants the Supreme Court to halt 2 lawsuits from account holders. The request comes after the firm unsuccessfully appealed the cases to the Ninth Circuit Court. So they went before the court and said, look, we should throw these out. These have no merit. Ninth Circuit Court says, that's not true. It's going to go forward. Latest saga for Coinbase. So the question was then is, what are these lawsuits that have such massive merit? These are the 2. The company is facing a suit from an account holder asking to be compensated for $31,000 in losses. Hey, that's a lot of money. Let's be honest, it is. After he gave a scammer access to his account. And from another account holder who's accusing Coinbase of holding 1.2 million sweepstakes in Dogecoin without specifying that participants didn't have to purchase or sell Doge beforehand. Let's get to the first part here. Let me just think about this in the comments. If I come to you and I say, hey, here's my bank account, here's the routing number, here's my passwords, you asked for it, I'm going to give it to you. They steal it from you, and then you go to the bank and go, why'd you do that? Well, you gave it to them. Well, I don't want to be held responsible. I'm not responsible. You're responsible. No, you gave the information to them. Why are you talking to us? Do you think that's fair? Or should people actually take responsibility for some of their actions? Just a quick question. I don't know. Maybe I'm a little too harsh on somebody, but it just seems like that's how it kind of should go. And it's amazing that they have to go through it. Maybe there's some idiosyncrasies in the case. I find it quite odd. Anyhow, interesting about that. Let's finish up with a couple of things. The Voyager and Solana update. As we all know, Voyager is now in Chapter 11, as they did one of the most boneheaded things I can think of, which is they did a loan for over $500 million to an unsecured creditor with no collateral called Three Arrows Capital, and it sank the whole business. So right now they're in Chapter 11, and they're not a liquidation because it's Chapter 11, not Chapter 7. And there's things that are moving. I think there's over 40 different offers to buy Voyager, so maybe we could get some relief. But this is from shingalevane.eth. This is from their Twitter account. Founder of Ethos, former director, CIO of Invest Voyager. So if you don't know, Ethos, the blockchain was bought out by Voyager for the VGX token, as I understand it. And that's what the VGX token was. And now it's just desserts that this group comes back in and says, hey, we'll bail you out after you guys bought our crypto. And they states this: we reached an agreement with Voyager to be a qualified bidder on certain assets. Given the sensitive nature, we can't really say too much, but things are going forward. So that's one positive thing. And then also for the Solana hack from yesterday, we covered this yesterday, Solana Layer 1 solution. Sam Bankman-Fried's favorite. Also James from Invest Answers. Yes, it is his favorite, I think. And I had talked about this yesterday. I go, look, don't shoot the messenger, but this is what's going on. We know that there's some type of hack, but I'm not going to blame Solana for what it looks like as an ecosystem hack. And the reason why I said this is because the same thing was said about Cardano and Sunday Swap. When people came and said, oh, well, Sunday Swap sucks, so Cardano sucks. It's not the case. Cardano built a decent foundation, concrete, right? Solana looks like it's doing the same thing. I know there's other problems out there, but with this ecosystem hack that had happened, it wasn't a Solana issue. It was part of this slope. And that was the ecosystem problem. It was a hot wallet, and now we're kind of figuring all those things out. So it's just a reminder, just to keep things in perspective. Don't go all in on one philosophy because you may not like that crypto and digital asset. I've been guilty of that myself. It happens. But just kind of sit back, take your time, let the information come to you so you can make the best decision, and that's for investment. And that really is investment advice. Unfortunately, I have to tell you that. Just take your time. I don't think anybody's going to sue me for that one. So this was from Sam Bankman-Fried. He said, this is a good example of how something can be underrated. A random dApp, Slope, gets compromised and is blamed for the underlying blockchain. To be clear, no core internal infra had any issues, single third-party complication. And then this was a Nomad hack and the Solana wallet, things that happened yesterday. So anyhow, I just want to bring that to everybody's attention that just because these things happen don't blame the underlying foundation. Sometimes it is the things that are built upon it. Anyhow, that's what's going on in the crypto world. Let's switch over real quick to macro. And on this channel, we try to figure things out and try to look at the big picture. We can zoom out when in doubt, zoom out. We try to zoom in when it's appropriate. And we know this problem is brewing. And we can look at data points all day long. Now, the problem is with data points, sometimes they are cherry picked. And that is exactly what the US government is doing with inflation. I personally believe. I could be wrong. So what I like to do is I like to get information from people who are in there and who can give me some insight. So there's two people I'm going to talk about today. One is this is a recording from farmer, rancher, cows, horses, goats, and those types of things, and the price that is being plagued upon by these people because of inflation, how it's going to affect, not now. It's like going through the mouth of a snake. It doesn't affect you right now, but as it passes through everything in 6, 9, 12, 18 months, that's when you're going to feel it. And that's why it's always to be a little bit cautious. So just take a listen to this. Let me stop my screen. Let me share the tab so you can actually hear this. Go from there. It's under a minute. Again, from a rancher, farmer, and what this is going to mean just for food supplies, just for food. Listen to this.
People being concerned about the gas prices, but what you really need to be concerned about is what your food pricing is about to jump to. Okay, calves and babies are just now being born. Keep that in mind. So the cost to raise them hasn't hit yet. This bale of hay last year was $4. Bag of grain last year was $6. This trunk full in here last year would have cost me $14. Today, $20 for a bale of hay, $18 for a bag of grain. I got 2 bales in here. It's $58 worth of food. Last just my goats and my horses 2 days. That's it. Wait until the prices catch up with your slaughter market when we start rendering animals in the fall. Prepare for $17 a pound chicken, $25 a pound bacon, $30, $40 a pound beef. It is coming. It's not a joke. Please be cautious. Please prepare. People being concerned about gas.
Can't say it much better than that. So these are the things that we're looking off in the future. Right now, things look all peachy keen. A little bit of a change for some parts, but I think there's some bigger issues coming. And then that will lead me to my next point. If we talk about the data points, and this is the thing that astounds me sometimes with data. This was Twitter account Silver. Well, actually, this same account over here, which was Wall Street Silver. Great account to follow on Twitter. They got a lot of great macro events. But if you take a look here, they said, hey, the new home average price. This is from the Fed in St. Louis. And when I was looking at this chart, I'm like, this doesn't make any sense because it's looking like that the average house price was $570K and then dropped all the way down to $450K. And I was like, I don't know. So I took a look at the actual from the horse's mouth, pun intended, from the Fed economic data. And you can see that, yes, look at these prices, crazy. It just went up and up and up and up and up. But it wasn't 575, it was like 450 roughly where we were. And then it's gone down to like the average median house price has gone down pretty, let me blow this up, pretty quickly, about 50 grand from a couple months over month. So that's what we have for the macro event. So I'm like, I still don't have enough information. So what I did was I reached out to Caitlin McKeague. She is a realtor in Phoenix, Arizona from Desert Dreamers Real Estate. And she had a great video which talks about our buyers gone, Phoenix real estate market update. And again, there's no greater intel that you can get other than the people that are actually in the thick of it and really know what's going on. So I linked this video in the description below, and also to our YouTube channel. You should check it out. Great macro information as far as what's going on in the industry. But on top of that, I had her come on and we did a quick 9-minute interview about what she sees in Phoenix, what's going on, the macro event, zooming out, zooming in, what her colleagues are saying, and where she thinks things are going. You can't get better than this information from somebody who's actually doing it. So let me play this on, and I'll see you back in about 9 minutes or so. And also, if you have a question for Caitlin, she's in the chats right now. So listen to this and ask her any questions you want afterwards. Let's take a listen. So as promised, what I try to do is bring people who are like boots in the ground, who know exactly what's going on. And I reached out, and thankfully, Caitlin McKee came on the show, Phoenix Real Estate, to talk to us about exactly what's going on. So Caitlin, welcome to the show for the first time.
Thank you so much for having me. It's a pleasure being here.
Yeah. So yeah, we really appreciate it because I don't trust some of these data points. You can pick and choose what the data points are, but there's no better intel that you can get from somebody who's actually in there and actually doing it. So I've got 4 questions for you today, Caitlin. The first one is, let's zoom out. Let's take a look at what's going on as far as the national scale and what the data is that you've been reporting. Then we'll actually zoom in. What does your local market tell us? Because you are in Phoenix, Arizona, and the surrounding areas, not in all of Arizona, but what do you see in your area? Also, number 3 is, what have you personally seen? And what are your colleagues saying to you? I think there's a lot of great information there from the people who have been around for quite some time. And then lastly, what's the long-term outlook for housing? So, Caitlin, let's zoom out. What do you see right now for the macro, for the nationwide? And you had a great video, which I linked in the description. Everybody should check that out. But what have you seen so far?
Yeah, so the whole country is starting to see a slowdown, some markets more than others. It makes perfect sense that most of the places that saw huge gains in appreciation and a lot of the craziness over the last 2 years are also the ones that are having the biggest slowdown. So in my research, I've seen, Boise being one of those, Austin, Park City, Utah, a few different places, Phoenix as well. We were making the lists for quite a while. And so, with everything going on with interest rate hikes, that's really been the main catalyst to change the market, slowed down buyer demand quite a bit. And then, everyone wanted to sell their house at the peak. And so we got an influx of listings across the nation and a lot of buyers who said this is too expensive. And that kind of slammed on the brakes for us on a national scale. So everyone's feeling it. It's just some markets a little bit more than others.
Yeah, because there's some cities right here which are still booming. Like you got the Miamis, you got the Austins, and those will probably go up for quite some time because everybody wants to move there. But there's always going to be those cities which are nationwide slamming on the brakes like you talked about. Okay, so that will lead me to my next question then. Let's zoom in. What does your local market tell us, especially in Phoenix and Queen Creek and Chandler and Ahwatukee, those types of cities? What do you see what's going on for housing?
Yeah, so sales have slowed down quite a bit. Late April, May is really when we started to see some things changing. And as we look back over the last 2 to 3 months, you can see a pretty big difference in where we've landed. So sales activity, it's down 25% year over year here in the Phoenix metro area. Our new listings coming to market, like I said, we got most areas got a big influx of new listings, Phoenix being one of those. And we were seeing new listings coming on the market like 1,000 per week, which was an insane amount compared to what we've seen. Yeah. We couldn't even have more than like 5,000 on the market at any time in the last 2 years, roughly. So to see 1,000 new per week, and then at the same time, buyers saying like, wait a second, this is getting really expensive with these interest rates. I'm going to hold off. So then we started to just gain a bunch of inventory because the sales were slowing down or transaction volume was slowing down. So the new listings coming to the market, that's up about 5 to 6% year over year. Which doesn't sound huge, but that's mainly because in the last 2 weeks, it just started to slow down. So we'll see. It hasn't been coming as fast as they were back in June. And then our demand is down about 28% here in Phoenix year over year. So that's kind of been the big killer for us.
Yeah. And so you've got the demand is decreasing. You have the volume of the actual houses that are still coming in, but not to a greater degree like they were before. Is that what's going on?
Yeah. And when I say before, I mean like last month.
Got you. Well, you know what? That would lead me my next question, which is, what have you personally seen? I've got a couple of friends who are in real estate here and then also in Puerto Rico. They're telling me that, I've got a lot of people who are backing out, a lot of people who they put in an offer and they withdraw the offer. But what are you seeing around town for you and your area?
Yeah, so there's a lot of that going on too. When this all first started, it got very quiet. So I was kind of the first one to say like, something's definitely going on here. I remember in April, I did an interview with Yahoo Finance, and their whole, question for me was like how crazy the Phoenix market is. And I'm like, I'm starting to see some things that are changing. I'm here to talk about the craziness, but I was like, we're just seeing some indications now that things are going to slow down. So that was kind of the turning point. But right now I'm starting to feel like people are capitulating, finally realizing like, okay, interest rates aren't the end of the world. I still maybe need to buy a house. Things are starting to just kind of not even out yet, but I think things are starting to shake out a bit where people are beginning, a few people are beginning to feel comfortable. So I've been noticing a lot more outreach from buyers who want to start the buying process than I had in the last 2 months. So I'm hoping that kind of the shock is over in some ways. Also, listing activity in terms of showings, offers, it feels dead compared to what it was 3 months ago. Median days on market is 20 or so here in Phoenix. And it used to be like an hour, right?
Yeah.
So 20 days feels like an eternity. But with that, that's creating a lot of listing cancellations because sellers went on the market hoping to sell, cash out, catch the peak, whatever it was. And they're not getting a lot of activity. They're not even getting offers, or if they are, they're not offers that they like. And so they've decided to just cancel their listings. So that big influx of listings is kind of starting to shake out, and we're not seeing as many more come to market. So, it's all very, very fluid. And I'm hopeful that in the next 1 to 2 months, we start to see which direction things are going to head.
It brings up a good point. Maybe we have a time bias. Maybe it's because we take a look at the market of what it was recently and say, well, it's crazy. There's going to be all these houses and people are going to get cash offers. People are going to step in and it's going to be really a seller's market. But now that we don't have that and we come in this other part, maybe people are like, well, this doesn't feel right. But maybe that's just the actual norm. Like, can you compare this time what you just talked about is like people canceling listings, people kind of getting out, withdrawing offers, to maybe another time when you were a real estate agent?
Yeah. I don't know the numbers off the top of my head, but for instance, like price declines, we've had like 5,000 listings decline their price this week alone. And, I think a normal number for that is, in the low thousands, but in the last 2 years, that was like non-existent. No one was cutting their prices. So that's a huge increase. As far as canceled listings, I mean, that's always existed, but it's definitely, when you look at the data, it's just a huge spike lately in the last month of canceled listings.
Gotcha. Maybe everything's just going to even out. Just going to take a little bit of time, which I guess would lead me to my next and last question, which is, what's your long-term outlook for housing? I know there's some people that are calling for this is the end of the world, destruction, Mad Max Thunderdome, and it's going to go crazy. Other people are like, it'll be a bump and we'll just take off like a rocket. What do you see as far as long-term outlook, and how would you define a long-term as far as a time period?
Yeah, I do think it'll be a little bumpy for a few more months, maybe through the end of the year, till we kind of figure out where we're going. But we had just an unsustainable market. So we're due for a correction, and that's really what I think is going to happen. So, prices are going to come down, but it's not going to be anything catastrophic, in my opinion. I think we got to get our footing over the next few months and figure out what this new market looks like. And then we'll probably stabilize a little bit. So I would say through the end of the year, maybe into Q1 of next year, things might be a bit rocky. And again, I'm talking mainly for Phoenix just because I know that so well. On a national scale, it's hard to say. And I think every market performs a bit differently. But for Phoenix, we have a lot going for us in demand and desirability. And we still have a shortage of housing here. We still have low inventory, even though we've had all these new listings, we're still really low compared to the population. So I think those factors will come back into play once we figure out where we want to be. So I think prices will come down a bit, a correction, and then, maybe we'll just be finally at the point where we should have been in terms of appreciation had we had a normal market the last 2 years,
Makes sense. Everything gets overheated, then there's a correction, and then we just go through another cycle. Okay, gotcha. Caitlin, I want to say again, thanks for stopping by the show and giving us some of that great information for what's going on in the area. Everybody, if you're taking a look and want to see more of Caitlin McKeague, she's got her YouTube channel. There's a link in the description. And also the one where we just talked about, the one from 2 days ago with the data, it is a must watch for what's going on. So Caitlin, thanks again for stopping by.
Thank you so much.
All right, let's jump back. And that's it. So again, Caitlin, thanks for stopping by, because there's no better data, I feel, than actually getting it from somebody who's actually in the thick of it and really knows exactly what's going on. And then also, as a reminder, if you are looking for Caitlin's, if you're looking for Caitlin's channel, this is the one, Caitlin McKeague. Also, there's a link in the description. Looks just like this, AZ Real Estate Caitlin McKeague, and her YouTube channel. And then the video that I was referencing, which has got some great alpha information, is right there. So go ahead and check that out, and we can go from there. So look, everybody, that is it for today for the news. What we're going to do is, this concludes the news part. You got to take off, get out of here. You've been here for 30 minutes. But I want to say thanks for stopping by. Hit the like button on the way out if you could. And I'll see you tomorrow. If you want to stick around, we're going to go over the Q&A. So I'll answer all your burning questions to the best of my abilities. I think Caitlin is still in the chat, so she'll be able to answer those questions for you as well. So let's jump right into the Q&A. So let's get into it.